Hello, and welcome to Fitch's next installment of its Virtual Investor Series. I'm John Bella, and I manage the ABS Ratings team. Joining me today, I want to welcome Margaret Rowe and Andy Brewer, both senior directors and senior heads for Auto ABS in North America and EMEA, respectively. Auto ABS performance in both North America and EMEA has been incredibly resilient since the onset of the pandemic, in many cases outperforming or at least exceeding expectations. So while we'll certainly highlight aspects of the broader Auto ABS performance today, we really want to focus on a few of the most topical, forward-looking issues that we've been discussing with investors. So our roadmap today is going to follow some recent headlines. One, the wholesale vehicle markets. Some wild stats from Black Book recently, observations that included, and I quote, within the last 3 weeks, newer used units reached levels that in some cases exceeded new car pricing. Wholesale prices have increased for 19 consecutive weeks in North America, or at least in the United States, and car dealers, in certain cases, are paying above MSRP. So we certainly want to talk about wholesale vehicle markets. Two, we're going to go to electrification. All the major OEMs are in the headlines today, noting aggressive moves to EV. For example, VW has stated they want to be 70% EV by 2030. The US-China market share number or target for them is 50%. Nissan is electrifying all new vehicle offerings in key markets by the early 2030s. Even GM has 30 new global electric models by 2025. And then last, which seems to flow pretty logically, we're going to end with ESG, a discussion about ESG. Not an investor call goes or discussion goes or ends without us having some contact with and discussion on ESG. We're also seeing daily articles in the financial and mainstream press announcing a new ESG initiative or perspective. There was a recent Wall Street Journal article, quote unquote, green finance goes mainstream, lining up trillions behind global energy transition. It goes on to state that assets held by ESG funds are nearing $2 trillion just this year. So with that backdrop and that roadmap, I'd like to start with Margaret. Margaret, in light of this incredibly positive run in the wholesale vehicle markets, can you share some insight on factors that are supporting used vehicle markets or used vehicle prices in the US?
Sure, absolutely. The strength that we've seen over the last year in the wholesale used vehicle markets is due in large part to low inventory on both new and used vehicles. In the spring of 2020, we saw production shutdowns resulting from the pandemic and heavy incentives to encourage sales. So both of these reduced both current and future inventory, and it's been further exacerbated by various parts shortages, chief among them the semiconductor microchip shortage. So Fitch's residual value index is again at peak levels, recording 25% in residual value gains on auto lease ABS transactions as of the end of the first quarter, which is the highest level we've seen since peaking at the same level the second quarter of 2011.
Margaret, thank you for those comments. Andy, can you share some EMEA perspective for us?
Yeah, it's much the same in Europe for the reasons that you outlined. I mean, we've seen stable residual values all above pre-pandemic values in the top 5 European markets, so France, Germany, Italy, Spain, and the UK. And this is based on data from AutoVista, the pricing experts. The highest movement we've seen in this period has been observed in the UK market, where prices have moved up significantly between February 2020 and the end of last year, before dropping slightly and recovering again recently. And we've seen this is particularly in older used vehicles, which offer good value, maybe higher mileage, but can be bought as replacement for public transport. In number terms, if we take an example for 36 months old, 60,000 kilometers, that's about 3 percentage points increase on the initial list price from 44 to 47%. Having said that, the economic outlook is still uncertain for most of Europe, but the outlook for the used car markets is largely stable.
Excellent. I'm going to stay with you. It seems like much of the RV strength that we've been talking about is driven by ICE internal combustion engines and that collateral. But can you discuss the impact of battery electric vehicles becoming an increasing share of ABS portfolios?
I mean, so far in European deals, we've only seen reasonably low percentages included. I mean, up to around 10% of the pool. I mean, although we'd expect that to increase in line with market trends that we're seeing. We don't believe that electric vehicles in themselves present any greater risk or reliance on the manufacturer. I mean, there's improved technology, but that's the same with all cars these days. They all have amazing tech. However, having said that, residual value performance has been more volatile in this area, and it can be impacted by external factors such as subsidies, government subsidies. And this is evidenced in recent declines that we've seen in performance in Germany following the state increase in subsidies last year. And there still remains big differentials between electric and petrol diesel options in France, Spain, and Italy. I guess the one exception is, again, the UK, where battery electric RVs have surprisingly reached parity now with petrol and diesel engines only in the last couple of months. So it's early days, and maybe partly supply driven and partly due to the reduction in subsidies that were recently announced in the UK.
Mm-hmm. Okay, excellent. Margaret, back to you. How about some perspective from the US or North America?
Yeah, so the US lags other markets in battery electric vehicles. We don't have the same emissions requirements in place, and it's really still a Tesla market. So the concentration that we see in ABS pools remains low in the single digits, but I think we could start to see things pick up, with greater environmental awareness and a more proactive and supportive administration. And, the commitment to the investment from other OEMs, we expect some of the barriers to adoption to move away. So things like, battery range anxiety and infrastructure expansion, some of the concerns around cost. And I think we'll see the percent in US pools increase.
Mm-hmm. How are you thinking about stress recoveries and residual value assumptions for EV vehicles and ABS pools?
Fitch's existing criteria framework allows for adjustments to haircuts and other assumptions, and the use of proxy data in the absence of robust historical data. And then, of course, some third-party data is available. And as new models are introduced, then supply will naturally expand, and recovery and residual value data will be more readily available as the product becomes more mainstream.
Great. Andy, can you compare or contrast the EMEA view on stressing these variables?
It's much the same, really. I mean, historical default and recovery data specifically on electric vehicles is limited. So I assume we're expecting higher haircuts that may be applied and higher market value decline assumptions. I mean, what we're expecting is there still be a healthy market for the older battery electric vehicles with maybe limited mileage, as it's still an option to use as a second family car, where things like range is less of an issue and charging. And this is supported by the data as well that we've seen in that area. But the marked increase in battery electric RVs that I mentioned earlier is very much driven by the newer models that are now coming back to the used market.
Mm-hmm. Great. It seems like increased electrification clearly seems to flow cleanly, pardon the pun, with ESG. How do pools with EV impact Fitch's ESG scores?
I guess strictly from an ESG perspective, in SF, there's a limited impact on the ESG relevant scores. I mean, in European auto with residual value risk, the emission score is typically 3 rather than 2 for most other areas. But potentially it could become less of an impact then for the EVs. I mean, the biggest impact we'll see will become the reporting of the CO2 emissions, specific to the manufacturer or to the pool. Ultra low emission vehicles would be defined in the EU as vehicles that emit less than 50 grams per kilometre of CO2. So CO2 emissions data reporting is going to be crucial to classifying the securitization as sustainable or green, and then to tap the demand from those investors. Although I guess this is, we're finding from speaking to the manufacturers that this could be a bit challenging, as the information is typically stored in different systems or across multiple manufacturers in the case of used car pools, and this may sort of ultimately impact the demand.
Great. Margaret, can you conclude then with some ESG comments or point of view from the North American perspective?
I mean, yeah, just as a reminder, for Fitch, our ESG scoring is a relevancy score currently. It's not green versus brown, good versus bad. It's not answering, is this pool good for the environment? It's answering, did any of the defined ESG factors impact our assumptions or analysis? And in the US, environmental factors in auto ABS transactions have a score of 2 or even 1. And a 2 just indicates that it's irrelevant to the entity rating, but relevant to the sector.
Excellent. Great. Well, that concludes this version of our virtual investor series. I appreciate both of your time, Margaret and Andy. Thank you. Thank you all for joining us. If you have any questions on any of these topics discussed today, please send an email to the address on the screen.